A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Is it time to buy retail ETFs now? Hopefully we get the answer to that question from our ETF Research Director, Nina Mishra, who joins me. And you know, it's been no big secret that the retail environment has been challenging lately.
Very challenging for traditional retailers because of rising consumer preference for shopping online,
yes. Yep.
particularly on Amazon. And most of the traditional retailer stocks were beaten down, hammered earlier this year, while Amazon shares soared.
Yeah, it's kind of interesting to know now that we're at this point. Maybe 10, 15 years ago, you wouldn't have thought that one company could create so much havoc in a sector.
It has totally changed the retail landscape. So we are a witness to this changing environment, and we have to invest accordingly.
Sure.
So as traditional retailers were hammered, and now at least some analysts saw good value in some of the companies because they were beaten down so much. And some of them have now rebounded nicely over the past month or so. And in addition to attractive valuation, a strong start to holiday shopping season also boosted optimism for these stocks. Some mall-based retailers saw strong customer traffic on Black Friday, though overall Black Friday and Thanksgiving foot traffic fell 4% year over year. That was expected. On the other hand, online sales surged 16.8% year over year to hit a new record of $6.59 billion. And mobile sales touched a new record of $2 billion for the first time. You know, youngsters specifically, they love to shop online.
Mobilely.
Yeah, so that is another trend which we are witnessing now. And of course, Amazon is the biggest beneficiary of the surge in online shopping, but some of the traditional retailers have also invested a lot in their e-commerce operations over the past couple of years, and that seems to be paying off now.
Well, they've had no choice.
They have no choice.
First of all, but you know what? A big question in my mind anyway, as we get into the new year with regard to the e-commerce and the online retailers is, if they vote to do away with net neutrality, how is that going to affect where these search engines, you know, drive buyers to which e-commerce sites, which will get the most traffic? That may become an issue.
Yeah, that remains to be seen. You know, so that is another reason why all these retailers have to boost their e-commerce operations.
Sure.
Also, in order to prepare for the coming changes and ongoing changes. These retail ETF stocks as well as ETFs have rebounded nicely over the past month or so. And it seems that holiday shopping season would continue to be strong from the early trends. So while in the longer term, it remains to be seen which retailers will be able to deal with this Amazon onslaught. But in the shorter term, it seems that retail stocks may do well.
Yeah, I like that word that you use, onslaught. And we can't forget the other issue of the shopping mall closures around the country. That, you know, is a related real estate issue.
Yeah. Those stocks are going to suffer badly if mall traffic continues to
decline.
Like it has been.
All right, you've brought 3 examples of some retail ETFs here, all different from each other. The first one, the Spider S&P Retail ETF.
Yes, so these are the 3 most popular ETFs in the retail space, which I wanted to discuss. And they are very, very different from one another in terms of their exposure and therefore their performance as well.
Right.
The first one, as you mentioned, XRT, is an equal weighted ETF. It's the most popular in space with $525 million in assets under management. And equal weighting means it has higher exposure to smaller companies than its market cap weighted peers. Expense ratio is 35 basis points, well diversified with 87 holdings, and it's down 1.5 2.5% year to date.
So equal weighting is a good thing?
It's a good thing when smaller companies do well, not when the huge companies like Amazon are the big outperformers.
Okay, all right. Amplify Online Retail ETF. Interesting ticker here.
Yes, IBUY, a very interesting ticker. So it focuses on retailers which derive a significant portion of their revenues from online and virtual sales. It was launched just last year but has gathered about 144 million in assets so far. Slightly expensive with expense ratio of 65 basis points. It has 39 holdings. Overstock, Carvana, and not surprisingly, Amazon are among the top holdings. It's up 42% year to date. Very good performance.
All right, and then Van Eck has one as well.
Yes, so the ticker is RTH. It is a market cap weighted ETF which holds 25 largest US-based retailers. So a lot of focus on big companies in this space. Amazon has almost 19% of the assets,
Wow.
whereas Home Depot and Walmart are among the other top holdings. And I would like to add that Home Depot and Walmart are among the very few retailers who have remained kind of immune to the
Yes.
Amazon effect and have been able to grow their sales. So because of those three top holdings, this is up 16% year to date compared to a negative return for the first one, XRT.
Yes.
It charges 35 basis points for expenses.
Okay, so let's see how they all stack up now to the S&P 500.
Over the past month or so, because the rebound in traditional retailers, XRT is the best performer. It is up about 11.5% over the past month. On the other hand, RTH is up about 8.5%, and IBUY is up about 4.5%, which was the best performer year to date. During this period, the broader market, represented by S&P 500 ETF here, is up about 2.5%.
All right, do you own any of these?
No, I don't.
All right. Get more information on ETFs by visiting the ETF section of Zacks.com. All you need to do is go to the home page and use the Funds tab in the top toolbar. It will help direct you to that section. With Nina, I'm Terry Ruffalo.